What's going on, everyone, and welcome back to the channel, Explain the Charts. Today, we are doing an in-depth analysis of one of the market's most watched stocks, Tesla, ticker symbol Tesla. We have a ton to cover, from major breaking news to a detailed technical breakdown across multiple timeframes. First, let's get into the news, because the current environment for Tesla is a real tug-of-war between bullish and bearish catalysts. The single biggest event on the horizon is the upcoming shareholder vote on Elon Musk's massive, near $1 trillion pay package. As reported by the New York Times, the outcome of this vote is seen as a referendum on Musk's control and leadership, creating a huge cloud of uncertainty. Yes, vote could be seen as a major catalyst, while a no vote could spark significant fear and a potential sell-off. Adding to the complexity, we have conflicting fundamental data. MarketBeat reports that investors are weighing positive news like new battery and energy storage deals against bearish reports of weakening October deliveries in China and Europe. This conflict between growth prospects and current demand is causing a lot of chop in the market. However, the short-term sentiment has been strong, with several outlets reporting on a stock surge late last month. On October 27th, shares popped significantly, which was attributed to positive analyst coverage from Cantor Fitzgerald and renewed hopes of cooling trade tensions between the US and China. Despite this recent strength, some analysts, like those at the Motley Fool, remain cautious, pointing to Tesla's extremely high price-to-earnings ratio of nearly 260 as a sign of overvaluation. This was also preceded by a Q3 earnings report on October 22nd that missed expectations, causing an initial drop in the stock. So, the narrative is incredibly mixed. Major governance questions, mixed delivery signals, valuation concerns, but also strong recent momentum. Now, let's see how this news translates to the price action on our daily chart. Looking at the big picture, Tesla has been on a wild ride over the past year. We saw a massive run-up from around $182 last June to a peak just shy of $485 in December. Following that peak, the stock experienced a severe correction, falling all the way back down to a low of $220 in March of this year. Since that March low, we've been in a powerful uptrend, recently reclaiming much of those losses. This chart clearly shows some critical levels to be aware of. The all-time high area around $480 to $485 is the ultimate resistance level. A major battle is expected if and when the price gets there. To the downside, the March low around $220 serves as the most significant long-term support. A more immediate support zone can be seen around the $425 to $440 area, which acted as resistance during the September rally and has been a consolidation zone recently. Let's zoom in on that volatile period in late October that the news was covering. Here we can see the price action from October 22nd through the 28th. Following the earnings report on the 22nd, you can see the stock opened lower on October 23rd, but was aggressively bought up throughout the day, showing strong underlying demand. Then, after a day of consolidation, we see this big green candle on October 27th, which corresponds directly to that positive analyst coverage and trade news. This shows how reactive the stock has been to headlines, shaking off bad earnings news and quickly rallying on positive sentiment. This surge broke the stock out of a consolidation range that had formed between roughly $430 and $445. Now let's switch over to the 1-hour chart to examine the price structure more closely. The hourly data we have here is from mid-October, right before that earnings volatility we just discussed. What this period shows is a classic consolidation phase, with the price trading sideways in a relatively tight range between $425 and $445. This type of sideways action often represents a buildup of energy before a major expansion in price. As we saw on the daily chart, the subsequent breakout from this range was very powerful. This is a great example of how periods of low volatility can precede periods of high volatility, something traders should always be looking for. For a look at the most recent action, let's pull up the 15-minute chart, focusing on yesterday's session, November 3rd. Yesterday was an incredibly bullish day for Tesla. The stock spent the first half of the day consolidating around the $456 level. Then, in the early afternoon, buyers stepped in with immense force. We can see a massive rally taking the price from that $456 support level all the way up to a high of nearly $474. This was a very aggressive, high-volume move, indicating strong institutional buying pressure. The stock did pull back slightly into the close, but it held the majority of its gains, finishing the day around the $468 mark. This powerful intraday trend shows that momentum is currently with the bulls heading into today's session. So, let's bring it all together and recap what you should be watching for, back on the daily chart. Your key resistance levels are the immediate intraday high near $474 and the major, all-time high resistance zone between $480 and $485. Your key support levels are the launch point of yesterday's rally around $455, followed by the more significant consolidation zone between $430 and $440. Now for some unbiased predictions. The bullish scenario, which I'd place at about a 60% probability, involves the current momentum carrying the price to test the $485 resistance. A positive outcome from the shareholder vote would be the primary catalyst to break through this level and push the stock into price discovery to the upside. The bearish scenario, with a 40% probability, would see the stock fail to break the $480 resistance, especially if the shareholder vote has a negative outcome or if broader market weakness emerges. A break below the $455 support level would be the first warning sign, and a move below $430 would confirm a change in trend, likely sending the price lower to retest support in the high $300s. The most important thing to watch for this week is any news or leaks related to the shareholder vote on Musk's pay plan. This is the event that will likely dictate the next major move for Tesla. And finally, a brief disclaimer. Everything discussed in this video is for informational and educational purposes only and is not financial advice. Trading stocks involves significant risk, and you should always conduct your own thorough research and consult with a financial professional before making any investment decisions.